Applying for a mortgage can seem like a daunting process, especially for first-time homebuyers, but with the right knowledge, you can make the process much simpler. In this video, we'll provide you with a comprehensive guide to the mortgage application process, so you can feel confident in your ability to apply and get approved for a mortgage. Let's get started. Before you apply for a mortgage, it's important to understand the mortgage process. This includes learning about the different types of mortgages, the required documents and credit scores, as well as the costs associated with taking out a loan. The process explained requires researching the various types of mortgages and the lenders you plan to apply with to make sure the terms are right for you. You must also determine the amount of the loan you need, the loan size, and the type of loan you want. That is, fixed rate, adjustable rate. Additionally, you need to gather the necessary documents and credit scores required by the lender. It is important to consider the costs associated with taking out a mortgage as well, such as closing costs, interest rates, and fees. Preparing your finances for a mortgage is an important step in the home buying process. Make sure to take the time to review your financial situation, including a review of your credit score, income, expenses, and savings. It's also important to be aware of any potential down payment requirements and closing costs associated with obtaining a mortgage. This may determine how much money you may need to budget for when applying for a mortgage and allow you to plan. Being mindful of a financial responsibility that comes with the loan can help you plan accordingly. Knowing the required amount upfront makes the process smoother and helps increase the chance of approval. When considering the right mortgage type for you, it's important to understand the different types of mortgages available, such as fixed rate and adjustable rate mortgages. If you're getting ready to apply for a mortgage, the process is fairly straightforward. You'll start by providing the lender with the details of your financial situation and the loan amount you need. The lender will then check your credit score and the appraised value of the home you plan to purchase, as well as other factors that might affect the loan decision. After the lender has reviewed all the information, they will then present an offer to you explaining the terms of the loan and the interest rate that applies. Knowing your budget and financial goals will help you decide which type of mortgage works best for you to stance. If you're at a lower initial payment but want to make sure your payments stay at the same over time, then a fixed-rate mortgage may be the right option for you. As part of the process for obtaining a mortgage, you'll need to provide documentation of your financial history, including your credit score, income, and employment history. This paperwork is necessary to assess whether or not you are qualified to take on a mortgage, as well as to get an understanding of the amount you can afford. In addition to paperwork, there will be a credit check and possibly other financial assessments conducted. You should make sure to include copies of tax returns from the past 2 years, pay stubs from the last 3 months, and evidence of any other sources of income or assets that you have. This way the process will be smoother and you'll have the best chance of being approved for the mortgage that you deserve. To increase your chances of getting approved for a mortgage, it is important to make sure that all of the information on your application is correct and accurate. You should make sure to provide ample documentation that proves your income and credit worthiness. This can include bank statements, letters of employment, utility bills, and pay stubs. This will give the lender the confidence to offer you the loan and the best available terms. Furthermore, the lender will conduct a credit check to assess the risk associated with the loan. The better your credit score, the lower the rate of interest the lender is likely to offer you. After careful consideration of the documents and the credit check report, the lender will decide if they are willing to approve the loan application. If approved, the lender will then provide a document containing all of the details of the mortgage loan, including payment amounts and due dates. It's important to keep in mind that mortgage lenders have different requirements when it comes to approving loans. Make sure to do your research and understand what those requirements are before submitting your application. Also, the mortgage process can be complicated, so it's important to take the time to understand the obligations and the terms of the loan. Knowing what to expect during the closing process can help you better prepare for when it's time to make a decision. Understanding the timeline and paperwork involved in this process is key before applying for a mortgage. You must also be aware of the fees and costs associated with closing the loan, such as title insurance, appraisals, and other administrative fees. You will have to sign a variety of documents, including a deed, loan papers, and title papers during the closing process. You must read and understand all documents carefully before signing them. Remember, it's not just an agreement between banks and buyers, but an agreement that might affect the rest of your life. Before signing for a mortgage, you should understand what type of loan you can afford. Research different lenders and interest rates, and get started on the loan application process. The closing process also requires you to provide certain financial documents, so it's important to have them ready in advance to ensure a smooth closing process for everyone involved. We hope this guide has given you the information you need to make informed decisions and get approved for your desired mortgage. Thanks for watching this video. Kindly like and subscribe.